again, before we get started, I wanted to make sure you read the risk disclosure statement, which we always like to show our traders here that come and join our services, and let them know that risk capital is money that you should only use for trading, and that is money that can be lost without jeopardizing your financial security or lifestyle. That's the basic message of risk disclosure of the CFTC and the NFA. And we like to post this just so you understand about the risk that's involved in futures trading. But if you'd like to learn how to get into it, you've come to the right place. Here at Day Traders Action and the Boomerang Day Trader, we specialize in helping new and beginning traders and experienced traders in getting and staying on the right side of the market every day. And it's an exciting business because, well, number one, you can work at home. That's always pleasant because your trip to the office is just down your hallway or whatever it is, or if you have a separate smaller house on your property or something, you can see it's very close to go to work. Also, you're nearby your family if you have anything you have to do emergency-wise to help them or assist, or if anything comes up, you know how it is. And you have all your home comfort things nearby, which is always pleasant too. So starting a business at trading and working from home can be quite a pleasant experience, but like any job or any business, every one of any job or business you have has its certain grind element to it. In our business, the grind is the combination of two things. That is the daily excitement of trading, which is certainly can be very pleasant, and this excitement of making a winning trade, or during a day session, a series of winning trades. And you also have with it the grind of the nervousness of the business, because it's a nervous business. You're putting capital on the line, putting risk out there, and you're trying to grow your business. So ideally, as you get better and better working with our tools at Boomerang and Day Traders Action, you're putting on a little bit more size, taking a little bit more what we like to call heat. You're taking a little more heat on the trades, and especially in this current period that we just happen to have landed in, thanks to the Federal Reserve riggers who jacked up the market so hard and high in last year in 2017 and coming into 2018 that we experienced a very heavy crash about a month or so ago. And now the end result is we're experiencing this ongoing continued volatility. And the reason I blame them is because they are in charge in many ways, not fully, but they're in charge of manipulating the way traders think about the markets through interest rates and all these different things. Hey, I'm not blaming them. They've been around a long time. But I'm just, in agreement with a lot of the pundits over the years that have expressed the idea that the Fed should be, dismantled. Enough of the Fed. We don't really need them. It can be run by a real United States corporation or portion of the government. Federal Reserve is not an American institution. So if we appoint a specialty government type of program that's totally involved in the benefits and the welfare of the American citizens, that would be, I think, a much better position. But that's just my view on it. Some people don't have any views and some have other views, but that's what I think should be done. We should have an American company. The Federal Reserve is not an American company, but an American company that's by America and for America and America's citizens. Just my 2 cents worth here as we get started today. So with that in mind, the Federal Reserve has got everybody cranked up into this big bullish mood all over the last year. And that's also from the new President Trump's amazing activities and getting the company kick-started back again into being really tremendous with the way jobs are coming in and all these different things. This is just normal market 101. These type of things make the market go up. That's all. And, whatever reason, the prior administrations did not seem to care much about doing that. That's a whole other issue, which I won't talk about right now. But the point is, this president did and does, and kicking things up is made things incredibly bullish. I think about maybe 6 to 8 months into last year, mid 2017, and maybe into the last quarter, the Trump train kind of slowed down, like all markets do, and it just kind of calmed down a little. It was pushing forward, but it didn't have that massive surge of of that what had been going on in the beginning. Just like with all new things, if you launch a new magazine, it explodes in popularity, or a new restaurant or anything, and then after a while, you've been there a while, and it's like, okay, this is here, it's good, we love it, and you become a subscriber or you go to that restaurant frequently. You get the idea what I'm saying. So I believe at that point the Federal Reserve artificially came in and started cranking the markets up and pushing because they loved what they see, because they could raise interest rates with that kind of action. I watched as a trader. I've been trading 30 years. For 8 years as the Fed, in this last administration, 8 years, they just kept saying, well, we just don't have the right conditions to raise interest rates. Every single meeting, because I follow all the FOMC meetings and everything, it's part of being a trader. And I'll talk about that a little bit later. But following all the FOMC meetings over and over and over again, especially the Janet Yellen years, we'd hear she'd come out, and prior to that, Ben Bernanke, and they'd say, we just don't have the conditions to raise interest rates. Now, they tried to artificially, by force, jack them up in 2016, and they're so wonderful, these Federal Reserve people. They waited until one day after the new year, and then the first coming back that Monday or Tuesday, I think it was, they raised interest rates. Welcome back, Happy New Year. They raised interest rates, and the market crashed 300 points on that day. I remember, and everybody was in shock. So that's, the problem with having a government or an organization running things like the U.S. interest rates and stuff that is not an American organization. You got people that only care about their own agenda and not that of the American people. At least someone who cared about the American people would have waited, for God's sakes, a week after New Year's, let people get back to work and get going. Why shock drop them on the day back to the markets? It made no sense, but that's the kind of action you get with these type of people. So hence my view on it, and 30 years of watching the markets and these things, you kind of develop some ideas of how to make things better. So similarly, today, what we've got now, this all leads to my main point of our webinar today, and that is, here we are. It's now been, I think, I don't have the exact date. You know what, I can bring up, well, I'll just not do that right now. I was going to say I could bring up a chart real quick and show you, but it's been about a month since this whole massive crash started. By the way, the Thursday and Friday before that, late Friday when it really started kicking in, I called the exact crash. I'm the only person in the entire financial industry that I know of that did. There may have been some other obscure people that nobody's heard of. I'm a little bit popular out there, not as much as I wish, of course, like anybody in business, but I was the only one that I heard of throughout the industry, and I have a lot of moles out there, and they would tell me nobody, and I was the only one, and I was advertising it. That's why I'm that audacious that I would advertise, and it was a fact. Those people in our Day Traders Action Live room heard me say, sell at least 50% of your stock positions and hedge the rest with our recommended hedges, which is the symbol SDS, QID for the NASDAQ. You can put inverse funds on, and as the market crashes, those go up, and you cushion the blow a little. The fact is that my private hedge fund only lost 1% during that massive 2-week insanity of crash that happened, whereas others were losing 20, 30, as much as 40%, hanging on to their high-tech stocks that they just worshipped and adored for so long as they cranked them up during that 2017 period. Well, lo and behold, it was a painless lower move, and that was even putting stuff in cash and selling half the stock. I followed my advice that I gave to everybody, of course, and the fact is that even with all that, when that market crashes, the whole ships. The whole ship sinks, and my God, it's very difficult. But we only lost about 1%, and now things are starting to kind of pick back up. However, I do have another forecast with you, which I gave immediately on the opening of our Day Traders Action Live room today at 10 o'clock Eastern Standard Time. I said the market's in a quandary. We've had 2 down days, and they're going to try, the riggers, our friends the riggers, are going to try to jack the prices up again. However, this is actually the beginning of a stronger down period, which I am forecasting will take the ES, the E-mini S&P, which I use as sort of a forecasting number tool. I'm estimating down to at least the 2722 area. So you can write that number down. And I stated that today when we were opening, when the S&P 500 was trading at 2775 area near the opening of the day. So here it is at 2754. It peeled off approximately 20 points or so, 25 points. And this is actually after a little bit of a bounce back. The Dow was down 330 points at one point, almost 90 points lower. So I don't know exactly what the low in the S&P was. In fact, if you bear with me a quick second, I will quickly discover that because we want to know. I hadn't prepared that. Let's see here. The low was, let me get that up here. 27.48 was the low. So how do you like that? So when it was 27.75 off the opening, half an hour into the market, when I opened the room, we open our room at 10 o'clock every day. You're always welcome to join us. I give exact crystal clear forecasts and market direction. I'm the only one in the industry that called that huge crash that came up, what I just described, telling our traders to sell half their stocks and hedge the rest. And the market got just ripped, and a lot of them were sending me thank you emails, really appreciating what I had done for them beyond our daily winning trades in the market on crude oil and mini NASDAQ. But that call exactly today at 10 o'clock when the S&P was, in fact, you know what, I made the mistake of, while I was checking that, of not checking what the doggone high was. Let's see here, because I got it on a daily chart. Let me see what the high of the day was. High was 2783.50. Now, I don't know. I remember looking at the ES when we were opening the room, and I saw it around 2777, 75, 77, 70. So 84 was the high. So they'd probably gotten goosed up there a little higher earlier. So right around that time, I said, it looks like we've had two down, but it actually, according to my work, this is the beginning of a stronger crunch down to the 2722 area. Or you can just think a move under 2730. Well, now that they're trading at, as we speak on Globex, at 2754 off a rebound from 48, you can see that was about a 35-point move from the high just today. So to get them to go down, we're at 54 now, to crunch them down to 27.22, well, that's going to be a pretty good move. Now, as they crashed, during that heavy crash period last couple of weeks, I started taking off portions of the hedge, and I'm still left with a portion of the hedge on. And in our trading room, I told everybody the exact days and times I was doing it. And I told them today, I said, when we get that crunch down to 27.22, I'm going to just bite the bullet, take off the hedges, and just be going with the raw portfolio and building back those stock positions I liked before that I'd taken the 50% off. I'm going to start doing that on the way down here now and preparing for, I believe, what's going to be a little bit, more of an up move because of earnings and things like that rolling into the second quarter. So that's my forecast, and you can do with it what you like, but I highly recommend you consider that we've been right in the market now going back 18 years, 75 to 85% of the time on our daily forecasts with my really popular newsletter, which was called the Daily Directional Forecast. I no longer publish a newsletter, but give those forecasts every day live and track them live in the Day Traders Action Live room. Well, here's what our topic is today, and thanks for listening to that little intro. I wanted to get all those important points out to you, but I got some more. Now I've got a chart posted here on Boomerang showing my my momentum indicators here. These are brand new. My volume momentum indicator, one of the only volume indicators on the market of all, what to speak of one that really works for day trading the futures. I've tried a few that people have put out and they're just junk. They don't do anything, but they thought they had to have a volume indicator. Well, my volume momentum indicator known as VOLMO is amazing. I'll show you more of that shortly today. And this is the price momentum. And the fact is, in trading, you have two things. You have momentum, and you have momentum of what? That's right, momentum of volume, shown here on the volume momentum indicator, VOLMO, and on price momentum, PRIMO. That's right, price momentum, PRIMO. PRIMO and VOLMO, these are my secret weapons I've kept secret for my own trading for the last 7-8 years, and I just released them recently to the public. You can buy these, they're only $195 each, very low cost. Keeping with my tradition of always wanting to help traders, I've kept our indicators at very low prices, and it's very valuable. And I'll show you how to use these later today. The main topic today is volatility. The price volatility just keeps on going. Now, here's the thing: about a month or so ago, and you know what? I'm just getting so official here. Seeing as how I've got this chart up here, this daily chart of the ES, what the heck, I might as well go in here and figure out the exact dates when we did have that big crash, just so when I state what I'm going to state next, I want to be real accurate. I was going to say approximately a month ago. Well, approximately is fine, and it works for our discussion, but here is the exact date. This was the 28th and 29th. These were the dates I mentioned, Thursday and Friday. On Thursday, I warned about the crash coming. On Friday, I reiterated, said sell half of your stocks and hedge the rest. In other words, if you had a $100,000 portfolio, and just theoretically, all of that was in stocks, the idea would be you'd sell every one of those positions in half. So now you have 50,000. You have a $100,000 portfolio with $50,000 in stocks, 100 or 50,000 in cash, and I was advising you to hedge the rest. So you would have taken that 50,000 and mixed it between the SDS that I recommended for being short, inverse short fund for the S&P 500, and the QID and inverse short fund for the NASDAQ. Well, here's the S&P 500 or the mini ES. Right after I gave that forecast later that Friday, they started melting down, and then they started getting hammered, and then it got roasted. So the date that they bottom out, they double bottomed out here. This candle hit them all the way down to 25.29. Now, you just have had to been there. I may have a recording of it somewhere, but I told traders when they were trading up here at 28.75, I said I'm forecasting a move, and those in the, if you're in here now and you're in my trading when you were there, you're shaking your head yes. I said 25.30 or lower. I said I'm looking for a move down to 25.30 area, because it's pretty hard when they're up here at 28.80 and you're calling for a move down to 25.30. Well, the low came in. I don't know how well you can see this little black box up here, but the low came in at 25.29 exactly. I don't know. Can you see that in that little box? I can't expand it. I can expand this chart, but it doesn't expand the box. Whatever. 25.29 right here. And I had called up here for them to get killed down to 25.30 area. Well, 1 point below that area, that's pretty close, I'd say. They double bottom tested exactly to 25.30 quarter. How do you like that? 3 ticks above the exact low test. Then they started rebounding them back. And then I had also, look, I'm just telling you, this is what I do for a living, and I work very hard. I forecasted them in this area rebounding back, and then I talked about them retesting a low. I said it looks like we're going to get some kind of retest of a lower area. Well, they didn't go back and test this, which was the norm, And you even had the famous floor trader on CNBC, who's really a great guy, really expert, the older gentleman. Can't remember his name right now because I'm doing a webinar. You know how that goes. And Murphy's Law or whatever it is. But uh, the UBS floor trader gentleman, he also called for a test of the low here down at this level. And when I heard him say that after I had said it in my room, I thought, okay, well, that felt good, you know. Felt good to know a professional expert like him also was thinking. But all we got was about uh, a 50% little. It was actually, you know, I remember running the fibs on this, and I could even run them on here now, but I don't want to get too sidetracked. But this is actually, you measure the high and the low, the Fibonacci retrace was actually right at almost the 0.618 retracement level here, and they pulled back. So I was watching for at least a retrace back to the what I call the micro Fibonacci retrace on the far end, which would have been down here. They didn't quite make it, and the bulls tried to bounce them back up, or it might have been the riggers trying to rebounce. Ever since then, and you might be shaking your head when you say this, ever since then, everyone and his uncle, it seems I talked to, expects and thinks we're supposed to now immediately zoom back up to the highs and keep blowing out to the high side. This is bringing me to the next topic. This is a very important webinar I'm doing today, which you'll see shortly. And that is, I want to say to you, this bull market, this massive, literally what I think was rather insane bull market, well justified by the new president and the policies and the results he got so quickly, and the Federal Reserve riggers coming in there. These are all dailies, so this is when the new president took office. This was the beginning, you know, January. So the markets, from the reaction of the new president becoming victorious, jumped up here. They stabilized, and then the ramp up began like crazy. Here's the first quarter, little pullback, and then they just went nuts. But this is when I started talking to traders, and I said, the Trump train has been fascinating here. The results he's gotten, the things he's done, and just beginning now, as we're seeing, is probably running out of steam. Now, this is just what while we're here, I'll show you that this is where I forecast my prediction, that it struck me that it was running out of steam but still had room to go. So, but would be running out of steam pretty soon because of just a normal market rally. I mean, the thing had got jacked up like 12% in this period. So they caught some support and kept ramping them up. And I remember clearly in mid-June or late June, early July, I said the Trump train, I believe, is running out of steam. And the only thing that can keep it going, other than the positive news and everything, could keep it stabilized and flat, but we're so overdue for a stronger 3% pullback, like down to here or something, would be our friends the riggers. Well, this looks like a typical rigger type chart here because all of a sudden they just start goosing. Now notice these are daily candles. And this is going to tie in with what we're going to talk about shortly about the trading. But look at this. No pullbacks. Here's where the market is so overdue for a 3% pullback down to the lower Fibonacci number, at least 3%, more like 5. And what do we get instead? Massive upside Federal Reserve, in my view, goosing and rigging, insane, illegal in my view, criminal in my view, illegal, criminal rigging of the markets. Look at this last ramp up. Come on. This market should be back in here. Normal markets, going back in history, the market had never ramped up even this much in history. It should have made a nice, refreshing 3 to 5% pullback, but instead, look who comes in. No pullbacks allowed. Every day I was just tearing my hair out. I mean, we were trading and we had 83 winning days in a row. A lot of great stuff going on, but some days you couldn't get that market to trade on the sell side if your life depended. They just wouldn't let it pull. It was so disgusting to watch. This last period, especially from the beginning of 2018, it was just a massive, it was like I just couldn't figure out what these people were doing. I said, please, somebody fire these people. This is not good. Anyway, what this does, though, this type of action, this is what I'm trying to conclude is saying it creates this. And I was warning everybody, especially during that first beginning of the new year, I said, this can only end up very bad. And it leads me to what I'm going to say now, which is you got to get over all of this stuff. It's over, it's done. That was then, and this is now. It's gone forever. We may get a big rip on the upside again. I'm actually forecasting what I just did a little while ago for coming into the next quarter. We're going to get some more up move, I think, and maybe go up and hit these highs again. But this is not this. This is gone. This is part of our history now. It's in our past. You can forget about it. Again, if they go and climb up here again, oh, ooh, rah, rah, get out the champagne. They went back and hit the highs. But this route up there, as you can see, and this is bringing us to our next topic. Sorry, but I had to explain all this to you. It's very important. Our next topic is, because we're day traders, you see, we look at this on a chart and it's like, yeah, I remember, and my stocks did well and this and that. But as day traders, we're in the micro portions of each one of these candles trying to pick off 3, 4, 5 points on boomerang. These days are over, and now what we've gotten handed with us in the first, how many days was that? 1, 2, 3, 4, like 10, about 2 weeks. I remember this. The double bottom, 2 weeks. Ever since then they got real volatile and crazy in here. And I've been telling traders, okay, well, after a week or so, hopefully, from what I've seen in the last 30 years in the past, this will calm down and we'll start getting, I'm forecasting a market that'll start moving back up again, but we'll get back to normal, calmer type levels. So I hope I've helped you with that, understanding that I need you to understand. Forget about this. Forget about 2017. It's over, gone, it's in the past, and it's not going to be like that anymore. That was a one-time phenomena, and that doesn't mean the market can't be bullish and go up. But what we've been handed because of this, and I'm going to accuse them again, this goofy, ridiculous, criminally insane Federal Reserve rigging has not helped anybody. It's at least for us day traders and a lot of investors who are now just tearing their hair out. And it's so sad. A lot of my watch, the stats, they were buying up here. The ma and pa who finally said, oh God, we just got to get in the market. It's going up forever. And they got in this area here after the new year. Well, it's a new year. They have these funny calculators. It's a new year. We might as well just get in the market. And they got in up here. Now they're getting blasted with what we just saw today with the Dow down 248 on the close, going as low as 335 points lower. Oh my God. You can only imagine how those poor folks are thinking that bought a bunch of index funds or something back then on the advice of their all-knowing broker, commissioned broker or whatever. Anyway, please just get over it. It ain't happening anymore. It's done. What we saw in 2017 is done. It's not, the market's not supposed to immediately jump back and go back to doing what it was before. That's called emotions. That's called traders' emotions, which brings us to one final point, and then we'll get into the action here. And thanks for listening. I'm sure you'll find it very valuable. I've given you some extremely valuable forecasts. I've shown you my record before the forecasts I've already done, which no one else had done, calling that top and everything. I haven't heard anybody. If you've heard of anybody, send me his name.
Order
send me
pending.
an email. Send me an article showing where he said he called it. I'd like to talk to him. I'd like to find out if he knows his stuff. Hey, I haven't heard of anybody. Anyway, here's some warnings. Don't look for variety in your trading. The market's really volatile. What happens? You get freaked out. You get bored. Not bored, but you get freaked out. Like, oh, I'm going to stand aside again. You start standing aside because you're going, market's so volatile, it's scaring the crap out of me. I'm going to stand aside. Well, that type of boredom gets you to start looking for variety in quotes. Ooh, I need some variety. I need to, you see all these emails coming in. Learn how to trade profitably with our method, or try this. Stuff like, you know, this is a sign that your mind is becoming fickle because you're afraid, because you're experiencing fear from day trading the futures with Boomerang or with whatever method you're deploying. You're coming on this webinar today. Thank you for joining us, trying to learn something. Well, what I'm telling you now is more valuable right now than going over Boomerang charts. We're going to do that in spades, but just hear me out. This is so important. Beware. This is when and I'm watching it myself because I sign up for all this stuff because I like to be in top of the industry. All these things coming in. Oh, cryptocurrencies. What rose out of this massive thing and now this crash? Cryptocurrencies, because people get bored. Oh, the market just keeps going up and up and up and up and up. I'm bored. And I got a fickle brain, and I know that a publisher will think he's fickle and they don't trade. So what do? They hire these so-called experts, create a new newsletter. Now all these currency newsletters are cryptocurrency newsletters. They're all just hustlers. Don't listen to them. Don't let this fickleness of the mind suck you in. We go in and make money every day. If you're afraid of the markets, join my Day Traders Action live room and sign up with us, and I'll trade for you. I'll give you the exact signals. We're winning just about every day in the markets, 300 to $1,000 a day average with a small account. Just go over to daytradersaction.com, trade live with Mohan. There's me giving a lecture, a 2-day seminar to 320 traders that had flown in from all over the world, including a dozen floor traders, professional. There was about 20 brokers there. I was talking to all these people there. When I would take a break, they'd all get around me and, yeah, I'm so and so. I'm from Chicago. Hey, how you doing? Hey, yeah, okay, whatever. Welcome. And so I met a lot of them over that time, and I talked privately with a bunch of them, and I asked them why they were there and everything. That's another story. We can't guarantee anything in futures. All I can do is show you results. But here's what we say. What if you could go to work in the morning for 2 to 3 hours, have the rest of the day off, and a 3-day weekend every weekend, and make up to 300 to $1,000 a day, which is 3 to 5 times the monthly cost of what you pay to join the room, which is only $149 every day, 3 to 5 times that amount. Gee, I think that's a pretty good deal. But anyway, go to my site there and you can sign up and join our room. If you're experiencing frozen emotions or frozen trading blocks of some sort, or the whipsaw is getting you because you don't know exactly what you're doing, we do, and I can hand you some very good trades and make some steady money. We just go in there and try to carve out a paycheck every day. That's all we're trying to do, is carve out a paycheck. Another solution I have for you is go over to Mohan's Trading Affirmations. Start by watching this beautiful video I made of a helicopter flying through the incredible jungles of Kauai, inaccessible by only the strong remote hikers that go in there with backpacks and canopies and camp out there. But otherwise, you can only get in there by a helicopter. Check it out. I think you'll really like the video. And then we have a lot of very excellent trading affirmations you can work with to get your mind inspired to go back into trading. Or, like I said, join our trading room and we'll give you the exact signals to trade, make some money with us. So beware of the stuff that's coming out now. A lot of these, I'm watching it every day. I'm going, watch out for terms like mega profits in the fill in the blank, cryptocurrency market, the marijuana stocks, this mega profits, buku bucks trading the such and such BS, make a killing in blah, 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 blah. These are all people trying to take advantage of people who are experiencing despondency from losing in their portfolios that they built up through the big jacked up market in 2017, or those who are despondent at day trading like us here. My new blank will make you a mega bucks in the new trend in, again, fill in the, cryptocurrencies, futures, marijuana stocks. Oh, cryptocurrency futures now. The goofy CME people opened up a cryptocurrency futures con. God, a chart is a chart is a chart. It doesn't matter whether it's gold or crude oil or mini Nasdaq or cryptocurrencies. Look, here's a mini Nasdaq chart right here. Here's a crude oil chart. A chart is a chart is a chart. It doesn't matter. Ooh, cryptocurrency. Oh, are you trading the guy emails me the other day? Are you trading the cryptocurrencies? I go, what the F for? I'm a NASDAQ trader and a specialist in mini NASDAQ, and our boomerang method is just completely mechanical almost. It's like 98% mechanical, and it makes 90% winning trades every day. Why do I need to waste time trying to reconfigure everything for cryptocurrencies, which I think are not even going to be around much longer? Maybe a year or two, finally, everybody will just go, oh, it was like the tulip mania, a bunch of nonsense, you know? Who needs it? What are they made out of? What is the value? And you hear all these reports of so and so hacked into a cryptocurrency deal and stole 30 million cryptocurrencies or whatever. You go, what? What kind of nonsense is that? Anyway, I'm here for you. I just want to fill you in on this webinar about that. We're going to have a lot of question and answers later. I know. Glad to answer those. But for right now, let's go to the charts. Now, first of all, I want to show you, and I want you to purchase these for your trading. First thing it'll do is remove a lot of the fear in the markets, because all the trading is in the markets. This is a mini NAS chart, is getting on the right side of the market. That's the whole secret. Get on the right side of the market and put those trades on the right side of the market and make the money. Well, what does Boomerang do for you? First of all, it sets up a trade channel. It says here's a red sell arrow. Gee, that's pretty easy. A red sell arrow saying a new trade channel on the sell side is opening up. Okay. You wait for that to close, and you watch. You see here, this is called the price pressure indicator. This price pressure, it shows pressure on the price. Now see when this dashed line crosses under this solid white line, that's downside pressure. Even though the market was up, this crossed over, and it's telling you, look out. And as soon as it did that, look at that candle crunched right down from 96.75 right down to 80, almost 10 handles all the way down to 87, just from the price pressure bands crossing under. Then they bounce back up, which markets do. But all of a sudden now you got the boomerang dynamic trend bands. You should know these if you're familiar with it or you own boomerang, starting to cross over. Well, they're already touching, so you can take the next pull back the signal line. You got the price pressure bands open, to pull back signal line, and they get hammered pretty hard. Now, what's important about this trade, here's what I want to show you that's really cool. Here's the price pressure bands right here crossing under, signaling selling price pressure starting to come in, just starting. You still got things kind of moving up, and then this came in with the crunch. That sort of set the tone. That was the 10-point move lower, the shot across the bow. But look what happened here. The price momentum, of course, dipped, and then on the bounce back it came back. But what happened, see this thick reddish, that's the momentum line that I've developed special algorithms and formulas where it started turning bearish right up here. It started changing to the red color, but all you're doing, it's so simple, is you're waiting for that momentum line to cross this fixed white neutral line. When that crosses and these candles or these histograms start turning red, you can see right as it comes in and starts crossing the zero line,
order pending,
you go short, and that price momentum just got hammered, and they bounced them back. But look, everything's still red on the histograms. Now look down at the volume. The volume is going to front run the price. That's the case, I would say, in about 90% of the time. So here's the volume.
order pending,
Even though the price is moving way up here, look at this. It's still moving up. Look at the volume histograms are turning red. Way up here, the momentum changed on this candle way up here to bearish, that red color momentum, and then the crossover, this minor faster momentum line, Prices kept dipping up, but look what happened. It's hovering right on the zero line, and then everything's matching here, red. Everything's crossing over exactly at the same time, and you get the blast to the downside. Now, not only that, this green line is a measurement of blasts that are going very strong. In other words, that's like a peak momentum blast area there. So blast, another blast, and wait for it. Now notice here, as the prices are dropping lower, they're selling off more and more, but you got a change in the color here of the momentum. It's blinking green and red, but still that tells you the momentum is starting to dry up a little. It makes another tap. Look at that exact tap on the momentum exhaust level right at the exact bottom on the volume before it's starting to turn up. That's very important, and nobody has this except us. Seeing an exact momentum blast peak level get hit, and it's exactly the bottom tick of the move. Then, things turn green, the histograms turn green, and it's the same story. The histograms rise up above the zero line, momentum's in gear, and you get a pullback to the, it's not the end of the downside, but you get a pullback on boomerang here and at 69.25, and they jam them up to 79.25 for a 10-point move, just based on price momentum and volume momentum shifting after a big move to the downside. See how that works? And it's continuous. Now they're back on the red. Everything's red. Down they go.
Order
so
pending.
You can purchase these indicators at a very low cost, only $195. And if you want to get all three of them, the price pressure bands, the volume momentum, and the price momentum, I'll give you a special deal. Just email me at mohan@daytradersaction, and I think you'll be quite happy using these. Give you a real edge using the boomerang chart patterns, the buy and sell channels, etc. So right now, I got to tell you too, on mini NASDAQ, not on crude oil. Crude oil is the same still, the same exact mechanical method, which I'll show you in a second, and then we'll go into question and answer. This was about a month ago. The crash had occurred. Let me bring you that one chart again. I want to see. I'm glad I made that chart because we need to know. Here's the crash. This date 209, and we're now at 3:15 tomorrow, 3:14 right now. So, and I was going to say it's been about a month, and I keep saying, okay, the volatility is going to calm down. I've said that now, not a lot. I don't say it every day. So we got to wait. I said it should hopefully calm after this all madness started. It wasn't right off the bottom, but after all this stuff happened, I said, okay, it should be calming down here pretty soon. I have said that. It's just kind of a vague reference because I thought it would. And what we do to watch for volatility calming down, the point is it hasn't. Here we are. This was 228, and here it is now, literally 2 weeks later, almost 3 weeks of market, full 2 weeks, a little bit more, I think a couple days more, 5 days a week, And so maybe it's 10, 11, 12 days of market. I'd have to count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I would say 11, 12 days. And the volatility, I was wrong on that call. It hasn't stopped. And that's why I'm reiterating what we've had to deploy this whole time since this massive crash. 5 point on this only applies to U.S. stock indexes and only applies to mini NAS because that's all I trade. But yes, you can reconfigure those pretty much by what you want to do is double the stop plus an extra point on ES. Well, here's how our normal for so many years, 8, 9 years, boomerang consisted of using a 3-point target gain and a 5-point stop. It consistently held the noise of a trade over and over and over. About 3 weeks, 4 weeks ago, when I did the first webinar on the volatility, I said we're going to have to deploy a 12-point stop on the mini NASDAQ U.S. stock index, not on crude oil. 12-point stop and target gain is going to be 8.5 points. That was the exact what I saw as being the correlation to a 3-point gain, 5-point stop. 12-point and 8-point, or 8.5. It's actually 8.5, but 8.5. And the idea is, okay, it's scary. We got to deploy a 12-point stop to hold the noise, and what I call a 7 to 8 to 9 points, 7 to 9, 8 to 10, somewhere in that zone, mental stop area. It shouldn't go beyond that, ideally, as the volatility shrinks. But it has been. Yesterday, right when I was thinking they're going to stop, slow it down, they just got back into crash mode and they just killed the NASDAQ yesterday. It was absolute. See, this is today. Yeah, so I mean, you remember yesterday, if you were trading yesterday, you know what I'm talking about. It was, so trying to catch dips, which was very easy to do over the last few weeks. Those dips, they'd pull them back and we'd get them without much of a problem at all. You could get them, buy them, and you wouldn't get too much trouble going on. Here's where it was, right off the opening. Right when we opened the room, they were way up here. They took the first hit. They tried to goose them up again. Took the first hit, and right here, this is where the problem started. Crunching them lower, rebounding, but instead of coming back up here, candles shrinking, normal volatility, and kind of pushing higher, whatever, they just got roasted and roasted and roasted again. Look at this on, you know how you can always, and that's what's so beautiful about the VOLMO especially. Start out with the VOLMO if you want to buy one of my indicators. Get the volume. There's none out there. The volume front runs the price. Get the VOLMO indicator. Look at first level. It's 2-3 histograms tapping the with the exhaustion line. It's not overbought or oversold. It's exhausted on a move, a volume move. So volume isn't the same as price. So when the volume relaxes, the price will generally kind of lift back up. A second level move here, another crunch lower here, another one here. You see what I mean? It was like successive hammerings on the volume to the downside. Bam, bam, bam. And then here's your hint using the VOLMO. They come in here and you go, when is it going to reverse? When is it going to stop? And then they slaughtered it one more time. But look, as the market's dropping, very strange, as the market's dropping, we're starting to see green histogram candles. And the green momentum line stabilized above this yellow line right in here, even as they're dropping. So that's telling you the price momentum is really strong. But that volume's starting to dry up on the buy side, the sell side. That means watch for a reversal. But the point is we got a reversal and then back again, hammering the downside and hammering it again. So it was, point is everybody saw that on Tuesday, that they weren't going to let it go. This thing was really in trouble. And then, of course, they rebounded them. Same thing. Price momentum shifts here. Volume shifts here with the green histograms peeking over the top, the green momentum line coming in, and they jammed them up with fresh new buying volume. Dripped them up here a little, but right up here you see how everything starts stagnating. Momentum line changes here. These candles shift, and then as this moves under the zero line here and here, you can see what happened, and it perfectly and beautifully correlates with my dynamic trend bands on Boomerang. The best thing is to buy Boomerang and get these indicators with it. Or if you don't have Boomerang, you want to buy it outright, then contact me and I'll make you a special deal so you can have all these. But look at that. Right as the momentum lines that I designed for you start coming right under the zero line, there's your yellow dots. Right under the trading and holding under the dynamic trend band number 2, and they proceeded to slaughter the market again. Holy smokes, just killed it. So it kind of sent a shot across the bow. Of course they ramped it up again, but look at how much struggle they were having compared to the downside. And then they hit them again and again and again and again and again. 10 minutes into the close, then finally the Federal Reserve cheerleading relief squad came in and kind of goosed them up into the close. But anyway, the point is, you have your charts, you've seen this, but I wanted to show you how good momentum indicator works on VOLMO, on volume, and on the price. Beautiful indicators. My secret weapons now available to you for literally peanuts compared to what you'll be able to make off of them. But what we got going now is a market that we're in, and I'm just here to tell you we still have to deploy the 12-point stop, use a 8 to 10-point mental stop. If they just won't let it go and reverse off of that and you're in a trade, you're going to have to just try to front run and get out before that 12-point stop is hit. It's just there as an emergency thing, but you just don't want to get hammered with it, you know. Continuously just try to deploy mental stop. I've been finding though that so far they've been holding the mental stops. If you get in a trade and it's not quite the exact turning point, which is pretty impossible to do sometimes, we hit it a lot, but sometimes very difficult. And so you got to have that room to contain the noise. Anyway, so back in today, same thing, and this is where, here today, I already explained to you, I called up in here. This is where NASDAQ was when I called. I opened the room, I said, before I even, I posted the risk disclaimer like I always do, and I said, before I say, let me give you my forecast. It looks like they're going to try to bounce them back up with 2 days down, but my work that I did last night says this is the start of a stronger move. 2 days down, but this is the start of a stronger move down to that ES 2722 area. So you can see real whipsaw, choppy upside move, and then they started again, blasted them lower. And of course, you have your VOLMO and PRIMO deployed to tell you what to do and to stay on the right side of the market. That's how you get your confidence back in trading. Get VOLMO and PRIMO, follow these carefully, and you'll just stay on the right side of the market. Don't go short or long until that momentum line trades back on the side of the zero line in the same general size trend. So there you go. That's all you need to do. And just a quick second here. I have a question coming in. Good to see you, Manish. Hope you're well. I'm not sure what you mean by do we need a level 2 or 3 for VOLMO. I'm not sure what you mean by that question. He's asking do we need a level 2 or 3 for VOLMO. What we do know, and I've always said this, is that the markets change every hour, every 5 minutes a little bit, and every day and then every period. They're always evolving, but the indicators I offer you work continuously with all changing market conditions. But you just have to use common sense that when the market's getting blasted on one side, you have to accept it. And it's not always easy because we're used to the markets rebounding back on the bullish side. Oh no, you don't require level 1 or 2 data at all. You just apply it to your boomerang chart, 450 tick chart. You don't need any other type of level 1 or 2 data because it's just for futures, for the mini NASDAQ. And this rule of expanding the stops and all that, that's only applies for the U.S. stock indexes. Crude oil is more volatile for sure, but I track it every day and we trade it, and the system and method hasn't changed at all. Yeah, in fact, we'll go over to that right now. It's making more extended moves because traders are now trying to get rid of that 60 handle on the crude oil. For a while, everything was bouncing 61 or so back up to 63. It was like an obsession with these crude oil traders. Now the new obsession is losing 60, getting rid of 60. And you see here, look at that, they just won't let them climb into this 59s. 60 35. Ooh, little lower here. 60 11. Look at that. See, it's like you can tell that they're all controlled. They just won't let it show a 5 in that number there. $60.12. They just won't let it show. Pretty soon they will, though. So now the latest obsession, after a while it was $63, $63 crude oil. Now it's push them all back to 60, push them to 60, and I think they're going to break them down lower, but you can see they're struggling to get them back up there again. But yeah, just regular chart, Manish, regular boomerang, but the you were asking, I believe, oh, for Volmo, you're asking, no, nothing, just what you're doing to build Volmo. Well, you're using the volume coming in on a 450 tick chart. It's painting the Volmo accordingly. That's all you're doing. Of course, you can use it on any chart you want, but it was designed by me for my personal day trading. And it just works like a charm. So with that in mind, let me show you crude oil, then we'll go into our question and answer and wrap up the session for today. Let me go back to yesterday's just for the heck of it. It was pretty active yesterday. That's why I want to show you. There's a lot of good examples. So what we do every day in the room is we look for trade setups after 5:45. That's 8:45 New York time, East Coast time. And I look for trades on crude oil. So it's real simple. I'm not even using Volmo or Primo or anything here. The only tools I'm deploying other than standard boomerang are the price pressure bands and this orange filter line, which is it's a two-part filter which has a faster whitish brown line that crosses over. But all I'm deploying here right now is the orange line, because what we've been doing lately, and I talked about this in the Boomerang blog, I have a webinar on a reconfiguration for getting in trades. I didn't show it on the chart here today on mini NAS, but on crude oil I'm showing that here. When the Cobra crosses over the orange filter line, you can take those trades in the vast majority of cases just based on that. But of course, you still want the backup of a matching color or crossover on the same side of the dynamic trend bands. That'll add extra punch to the chart, to the trade, because you don't want to get stopped out if you can avoid it. And so far, it's incredible. We've been getting steady 80 to 90% winning trades. So here's the first trade of this was yesterday. You see the Cobra, that's called the Cobra, this dotted line crosses this orange line filter, which is scooping under those prices. And here's a crossover. This is classic boomerang. Crossover of the dynamic trend bands here with the price pressure bands opening on this candle spiking up. You trade a pullback to the sig line, 61.03, and you're looking for 10 points. So we'd want to see it go up to 13. It went as high as 17. So there's your 10 ticks. That's all we're looking for. Now here's another classic. A sell channel opens up in reaction to this up move. The prices pull back, but it doesn't even disrupt at all the dynamic trend band number 2, which indeed, if you put the cursor up there, you can see it sloping up. See how I put that flat line on there? You can move it right up to there, and you see it's still sloping up all the way. That piece of pizza, I like to call it there. It looks like a slice of pizza. There's no pizza, there's no party, there's no trade. See, if I put it right here, there's no pizza slice. It's flat as a pancake. Anyway, so this is a classic second level trader. Level 1. Well, now maybe that's what you're referring to. Oh, you did say data. No, you don't need data, but you can use Volmo to measure level 1s and 2s in the trading chart pattern. So here's a classic reversal. You got to have the candle, maybe yellow dots, maybe not, but then the reversal candle and a pullback to the signal line for your buy trade on your second level one, 6105, 6516. So right in there, another 10 ticks. And then where they go after that, which was to the moon, doesn't matter. We don't care. Same thing here. Now, there's two trades starting the day off. This was yesterday. Here comes a new sell channel. So you ask yourself question number one, has the sell channel candle closed? Yes. Question two, are the price pressure bands open? Yes. Question number three, has the cobra crossed over or under, in the case of a sell channel, under the orange line? Yes. You're good to go. You got a crossover dynamic trend bands, price pressure bands open, cobra crossing your, you're an ace of spades to go short right here at 85, and 85 comes down to 78 and bounces back, makes a little scary bounce back, but you just hold like we're all good at doing with futures trading, and then they crunch them down and give you the 10 ticks for the third winning trade of the day on crude oil. Once again, a classic second level trade with a hard crunch to the downside as those crude oil rigger folks try to jam them down to 60 again. They counter move. You get a buy arrow. You got to have the counter buy arrow. We want to see the boomerang algorithms shift, and when they shift and signal, they'll do that with an arrow on a new channel. When they do that, and then you get a counter arrow back into the sell side, which is the second level. You trade the pullback signal line. You don't need any other conditions. All you need to do is sorry, phone distracted me there. All you need to do is trade the next pullback, the signal line, and down they go for a third level hammering. Notice they're trying to get them back in the 60s. I know it would be great to be back in the 60s in many ways, but not on the crude oil. But sure enough, look at that. You see, these crude oil guys, they just want to drive that price down in the 50s again. Look at that. Just a good solid roasting on the downside. We don't care though. This is another important aspect of trading. You got to learn not to care. Who cares if there was a big move to the down? Oh, if I only held, I could have paid my mortgage or whatever. You got to stop dreaming and just follow the system. This was the fourth or fifth winning trade. Fourth winning trade. Per contract, you got 440 ticks, you got $400 a contract. Catching the big move, that's fine, but that requires a special type of method. You'd have to deploy a special method. Now, one rule that I can share with you real quick and then we'll wrap. That's all there is to it. That's the crude oil method in a nutshell. It works over and over every day. And during this day, there was there was, I think, 4 more winning trades. Not in here. This is just a whipsaw frenzy. But one simple rule. Whenever you get a long extended move, don't plan on taking the first buy trade signal. You just get either whipsaw, a lot of whipsaw, or it'll actually reverse. Just wait till the second one. So look at this. First, applying that rule, just ignore this first trade. That's actually a level 1 up, a reversal against the level 1 up, where the arrow did print, and then a counter print of a new buy arrow. That's a second level trade. That's the one you can take. That's the one you want to get in. The arrow's at 42, and 42 shoots right up to 52. If you didn't catch 8 to 10 ticks in there, they pulled him back a little bit, and then shot him up. So, hurrah! There it is. 6 winning trades. This is a third level trade we don't take. Here's a brand new one here because it got broken up by this. So to trade them in reverse here is okay. Cobra crossing under the orange line. Trade number 7. Trade number 8 here. Say jam them straight up. And 9 down here. And you don't want to trade too close, much past 10:30 my time, which is 1:30. Crude oil starts getting ready to close. So 8 or 9 trades in that day yesterday. Huge. So with that in mind, if you have any questions, just as a reminder, please go to my Day Traders Action site, Working with Trading Affirmations. Scroll down to the bottom of the page. And while you're there, sign up for my live Day Traders Action Room. Let me do all this instructing with you, and then live in the markets, watch me trade them. We had just, people seem to always ask this. I don't mind. Today we had 13, let's see, we had a total of, we hit our target goal early on 6 trades of 8 to 12 points is the initial target, 8 to 12 points. We got 8 1/4. A lot of whipsaw, but we had some very successful trading. We had 4 winners in a row, 2 early losses, 8 1/4. I told everybody you can stop here, but I'm going to do a couple more volunteer trades. I did 3 more. First one lost 10 points, second one gained 14 points, third one gained 10 1/4 for a 13-point gain. So a total gain of 21 1/4 points today, trading the mini NASDAQ. And there was only 3 crude oil trades, but still a good day. If you traded all the signals from the crude oil and the NASDAQ, over $1,200, but you might have had to have a partner or something in there helping your family member. It was very busy in the mini NAS today. So thanks very much. And if you want to ask questions, I'll be glad to answer those for you. But thanks for joining with us today. If you have to go or anything, I understand. But thanks very much for joining with us.